During the 13 years he headed the Fidelity Magellan Fund, it was a top-ranked general equity mutual fund.
I try to explain to people their great advantages, their edges they have, and that they should get involved in stocks.
Right.
And they should do it on the right basis.
This was on the first book.
Right.
Yeah.
And obviously I didn't make a great impression because the percent of people's assets involved in stocks has gone down. In 1960, people had 40% of their financial assets, including their house, in stocks and mutual funds. In 80, that was down to 25%. It's now down to 17%.
And why do you think that is?
Well, I think people, in the decade of the 80s was the best decade this century for stocks. I think people managed to lose money in the 80s doing it themselves because their methods were so flawed. So I really feel as though I wanted people to understand. I don't want anybody to buy a stock. I'm saying if you're going to buy a stock, you should do certain things.
Right.
If you're not willing to do these things, you should leave your money in the bank. Well, I don't think people understand there's a 100% correlation with what happens to a company's earnings over several years and what happens to the stock. If the company, McDonald's has done very well as a company,
right,
the stock has done very well. People worry about too much money supply, what's happened to the price of oil, who's the president, who's being nominated for the Supreme Court,
it's all
the ozone
earnings.
layer. It has nothing to do. McDonald's earnings go up the next 10 years, the stock will go up.
Yeah, but they're telling you that these other things influence the amount of earnings of a particular company.
Yeah.
If we're in a recession, people are not going to spend
That's
as much money on going to the movies
Absolutely.
or whatever they do.
Right.
And therefore, you got to pay attention to these other things because they impact on earnings.
They are very important, but you have no idea of knowing what they're going to do. Alan Greenspan's the head of the Federal Reserve.
Right.
He cannot predict interest rates.
Yes.
He'd be the first to tell
He can
you.
influence them, but he can't predict them.
He cannot predict what long-term interest rates are going to be 1 year from now, 2 years from now, 3 years. He's even surprised how low they are now.
Right.
So how am I supposed to predict interest rates? How am I supposed to predict the economy? You certainly remember the recession of 82.
Yes.
1982, we had a 20% prime rate, 14% unemployment, 12% inflation. I don't remember anybody telling me in 1980 or 81 that was going to happen. Yeah. All of a sudden, we had the worst recession since the Depression. I didn't read about it in the paper. So it's crazy to think about these things. I'm saying people have natural advantages.
Yeah.
Let's say what you do for a living is you're involved in the restaurant industry.
Right.
You supply paper products. You supply kitchen equipment. You help build restaurants.
Right.
You saw McDonald's. You saw Chi-Chi's. You saw Chili's. You saw Cracker Barrel. You saw Dunkin' Donuts, Kentucky Fried Chicken, Taco Bell.
These are all success stories.
These were 40-fold. You made 40 or 50 times your money. You don't need to make that kind of money many times in your life, right?
Yeah, no.
That's all you had to do was follow the restaurant industry.
Yeah.
People are in industries. They're in the publishing industry. They're in the chemical industry, the paper. Why don't they just stay with that industry? You only need a few stocks a decade. How many good stocks do you need in a lifetime? Instead of people that are in the restaurant industry, they're buying biotechnology stocks. Right. The people in the chemical industry
nothing about
know nothing
biotech.
about it. The people in the chemical industry are buying oil stocks.
Right.
It's absolutely absurd. People don't understand their natural advantages, and they don't use them. So that's bad, number one. But worse, number two, is if you don't think you're a good ice skater, or if you're convinced you're not a good cellist, you're not going out and try it. But people are buying stocks anyway. Yeah. They're not discouraged. They just think it's a gamble. Yeah. So therefore, they go forward and they bet on one stock for a week and a half, and it goes up, and they make $2 on it. Then they sell it, and they buy something else. When 3 years is over, all they've done is generate a lot of commissions, and they've probably lost money. That's a mistake.
So your advice is what?
If you don't understand a company, if you can't explain it to a 10-year-old in 2 minutes or less,
yes,
don't own it. Because when it goes down, let's say the stock goes down 2 points.
You won't understand what's going on.
What do you do? Do you buy more? Do you flip a coin?
And chances are your broker doesn't either?
He or she certainly doesn't know about it. 10 years after Walmart went public, 10 years after it went public, 10 years after it went public, it's a 25-year-old company now. Right. You could have bought the stock and made 50 times your money on it. 50 times.
This is if you bought it 10 years
after it was public already.
Yeah.
It already gone up 5-fold. So you could have made 250-fold. But I'm saying, let's say you were in a town, they came into it and they said, boy, these prices are great, they're doing terrific, I like the bargains, and you checked it out. You spent a little bit of work on it. Yeah. I mean, people are very careful. When they buy a dishwasher, they do some research. They'll put $10,000 in some stock they hear on a bus. So if you did a little bit of research, you'd say, Walmart's only 10% of the country. They're not even saturated there. Why can't they go to the rest of the country? And I talk about a wonderful example. Is a 7th grade class. Yeah. The teacher of that read my book, and my first book that you were talking about. You and I did a show on that in Washington.
Right.
You remember that show? This is a long time ago. She read the book, and I said, if you made it through 5th grade math, you can do it in the stock market. She says, okay. She started teaching it in 7th grade, 7th grade class. These kids had to study companies. They had to look at their balance sheets to see if they're solvent. Yeah. And they picked stocks. These stocks were up 69% over 2 years when the market was up only 20. And they picked stocks like Limited, they picked the Gap, they
Right.
picked Walt. They understood these companies. They also picked IBM. I lost money on that too. I mean, everybody makes mistakes.
Everybody did, yeah.
We've had 8 recessions since World War II. We've got out of every one of them. This is number 9. There's nothing unique about the system. We'll get out of this one.
IBM, what happened to them?
IBM had a wonderful business. They used to go to companies like Fidelity, Chase Manhattan. They used to come and explain to these people how to use computers.
Yeah.
They didn't know how to use computers.
Yeah.
They went to companies and went in with very talented, experienced people.
IBM did.
IBM, and explained to people how to use computers. Today, all these companies, like Johnson & Johnson's, American, Bristol Myers, they have people in the company already that know computers backwards and forwards. The same IBM people walk in with these solutions. They don't need all those people.
So all these companies took IBM's business away from them?
No, they do internally. They have experts internally now that are
Right.
trained in, it's called now Management Information Systems. They have all these fancy
Right,
acronyms
right,
for
right.
it. They have skilled people. All they want now is software and a cheap box.
Right.
They don't need all these. So IBM was dealing in a system that was very effective for 3 or 4 decades. Now the technology has moved to the chip. The technology has moved to the software. It's not the box. It's not the storage device.
So what should IBM do? What should this board of directors of IBM, which is looking for a new chief executive officer, what should they be looking for?
Well,
I hear
obviously-
people saying they ought to just, Mort Meyerson, the number 2 guy to Ross Perot down there, said maybe they ought to dismember the thing.
Well,
or maybe they ought to create all kinds of little entrepreneurial companies from within, break it up.
They'll eventually, they have incredible technology. They're very skilled. They have a lot of determination. Right now, unfortunately, it's sad, they have too many employees. They have too many factories. They try to do it all themselves. They're working the right direction. I mean, there's nothing wrong with the direction they're going. They will turn it around. They're in a hard process because the technology is advancing all the time.
What was the genius of Bill Gates and Microsoft, which now has a higher net worth than IBM, doesn't it?
Well, there's a lot of bright people. Oh my God, his net worth alone might be more than IBM's profits. I mean,
You meant him individually.
Yeah,
right.
his brilliance. There's a lot of brilliant people, and a lot of luck. IBM adopted MS-DOS as the operating system.
Right.
They rushed the market with the first computer. They needed an operating system, and he had the only one. If they'd waited a couple years, they could have used their own. So MS-DOS became the basic operating system of every computer, whether it was a compact computer. The only computer system that didn't use it was Apple. Apple had their own operating system. So every computer that went out there all over the world needed MS-DOS. He used that to come along with Windows. So he was there. He was like the gasoline